Hi, I'm Jake. I'm one of the managing partners here at Altive. Today, we're here to talk about how technology is transforming alternatives into mainstream. Now, the first question to ask is, what is alternative? Alternative investments are basically anything that is not on the public market. Anything on the public market like stocks, bonds, mutual funds, these are all public market products. Anything else, we call them private markets or alternatives. Now, a lot of people used to think that alternatives, as its name sounds pretty scary because, well, nobody knows what it is. But in fact, if you think about it, in your public market, we call them stocks. In your private market, we call them private equity. In your public market, we call them bonds. And in your private markets, we call them private credit. They're actually not that much difference, but the return profile is massively different between the two. Public markets are very susceptible to correlation, meaning when the market drops, let's say 30%, right? Chances are your stocks are going to drop 30, maybe a little bit less, 20%. When the market is volatile on bonds, let's say 20%, chances are your bonds are going to go down 10 to 15. When it comes to private markets, if you invest in private equity or in private credit, chances are you're going to be less correlated towards that volatility or that choppy water. Another key difference between the two is public markets are talking about relativity to the market itself. So when the market goes up, your performance goes up. When the market goes down, chances are your performance is going to go down with it. That's relative return. When you talk about private markets or alternatives, we give you much better absolute return because the performance of the asset is not as correlated to the public markets or any external factors like geopolitical risk or the credit crunch or anything like that. So let's do a bit of an example in private equity, right? When a company starts in its infancy, a startup, they really start gathering momentum by going out fundraising. And they take venture capital, seed capital, or angel capital, things like that. That's really coming from private markets because, as the name suggests, the company at its startup stage can't go public, so it has to get its funding from the private markets. As it progresses through its lifetime, from VC all the way up to round A, round B, round C, when it's ready, then it will go public. So most of the growth of the company, think about when you start a company at 10 people, 20 people, all the way until a unicorn company of thousands of people and $100 million or $1 billion valuation, that growth is really captured by these venture capitalists and private equity investors in the private market. When it goes in public, yeah, you'll still get some return and stocks do go up, but that return is much lower than what you would have gotten had you entered at a private market stage. Take another example, a real-life example, like Meta, right? Better known as Facebook. So when Facebook started as a small company out in the US, by the time it got to an IPO, its return profile was actually 1,200 times, 1,200. When it went public, from public IPO till now, that was an 8 times return. Still very much, but nothing in compared to the 1,200 times return that you would have gotten had you entered as a private investor. So alternative investment sounds amazing, right? How do you get access? Traditionally, these investment opportunities are only available to institutional investors, insurance companies, sovereign funds, mega tycoons. They get access to these products because they can write very large checks, 10, 20, 100 million US dollars per ticket. Of course they get access to it. So how do individual investors gain access to private markets? There are 2 hurdles to overcome: information transparency and large ticket size. On the first point, the industry pain point is information and analysis about private market investments are very limited to, well, an even smaller and limited group of investors. Individual investors have very little understanding or very little access to this information, which is why they really need a one-stop technology investment platform that contains information and analysis about the private investment opportunities. You can only invest in what you know and what you can see. Another hurdle is the large ticket size. The industry pain point is they can't justify to process your KYC and onboard individual investors given the small amounts that you contribute. What you need is an AI-empowered KYC solution to fasten KYC process from weeks to days and achieves much better costs than the traditional way to meet KYC requirements. You also need a fee-to-fund structure to aggregate individual tickets and deploy capital as a lump sum. Coupled together, you can now get into private market investments with a much smaller ticket size. According to a study by McKinsey, institutional investors typically invest between 30 to 50% of their assets into alternatives, while individual investors had just about 2, if not less, % in alternatives. The same study projected that the share of individual investor has the potential to double or even triple in the next 3 years. McKinsey estimates the trend could add between $500 billion to $1.3 trillion in new capital into alternatives. With technology, you could now be one of those investors capturing this trend. By investing into alternatives, investors are able to enhance your long-term return potential, diversify your portfolio, and most importantly, have a peace of mind from chasing after the volatile stock or bond markets. In short, we believe technology can empower investors to get access and information about alternatives. A technology platform like Altive is really here to allow and empower investors to go into private markets seamlessly. Previously, a lot of Asian investors weren't aware about private market investment opportunities, and Altive is here to solve it. By using our proprietary technology, we're here to bring the best investments in the private market space to you, and we hopefully see a lot more mainstream investors go into this particular alternative stream.